So continuing on, we're talking about credit and what is a credit score. So what credit is in the eyes of someone who's looking at credit, like let's say a banker, someone who's doing a rental application, or any of that sort that people when they are looking at credit, it's a way, it's kind of like your digital form of character, what to look at, right? So let's say whenever you apply for something, it's technically what you've done is done a promise to pay, right? So you promise to take something and you promise to pay it back in a timely manner, and they want to see how pretty much what you've done to stay on top of your words, right? That's like probably the easiest way to explain that is, are you staying on top of your obligations? You promised to pay, are you paying it late? Are you not paying at all? All that stuff kind of helps kind of identify to someone who's lending you something like a bank or mortgage company or anyone whatsoever to see, are you keeping your word? Are you making your payments? Are you not, right? Obviously, it's a little bit more complicated than that. It goes into a lot more detail, but that is what the gist of it is, right? So to say to someone, if we lend something to someone, are they going to pay us back on a timely manner? Are they going to pay us back like they promised to, right? Now, what is a score? A credit score is technically a statistical mean, right? It's a bunch of statistics that a credit, like a credit card company, sorry, not a credit card company, but like a credit bureau company like Equifax or TransUnion, they compile together and they give it to the banks, right? So it's statistics. So for example, they put certain points onto certain criteria in your life and it will say, how risky is this person, right? So it could be the fact that, are you single compared to married, right? So maybe married is less risky than single. Are you renting? Do you own? How long have you lived at your last address? How long have you worked at your last address? Do you move around a lot? Do you switch jobs a lot? All of these things there could be a risk factor, right? There could be a risk score to that. Are you married, divorced? Are you doing credit checks quite oftenly? Are you doing a lot of inquiries? Are you a credit seeker? So everything will be given a certain score. And then what they do is they compile these scores and they'll give you a number. And obviously the higher number that you have, that means you're less likely to be a risky individual or client. So for example, let's say someone has a Beacon score of 600 compared to someone who has a Beacon score of 800. So what does that mean? So someone that has a Beacon score of 600 just means 1 out of 600 people with that score will most likely default, right? So that means that the ratios are pretty high with the lower score compared to someone that has a Beacon score of 800. That just means that 1 out of 800 people with that score will most likely default, right? So the risk goes down greatly as soon as your credit bureau goes higher, like your score goes higher. So I get a lot of questions like, is the credit score, is it based out of 100? What is it? Ideally, yes, you want to have the highest score, but there's no such thing as a highest score. I haven't really seen one. It just kind of varies. I've seen a range of as low as 400 to a maximum of like 850, 860, maybe higher, it's just depending. But it doesn't really matter. But once you hit a certain threshold, you're still going to be as good, right? So for most banks, it's going to be 680 to around 720 or higher. Anything above that is just now bragging rights, right? It doesn't really affect your lending or anything like that. But you want to kind of understand what credit is, right? So like find out what things are holding you back, what you can do to increase it. You might have to make certain tweaks here and there, and your Beacon score could go up drastically, right? I've had people jump up from their credit scores within 6 months, go anywhere between a 600 to like a 750, right? Which is very, very impressive. And only the thing that it had to do was certain minor tweaks to their credit. All right, guys, so one more thing to note about a credit score is how does a credit score really work, right? So sometimes you might have a really high score, but still not considered to be good credit, right? So the way the banks look at it, you need to have credit score for a certain time period for it to be considered an actual credit score. So what banks look at, you need minimum 2 trade lines. So what is a trade line? A trade line could be a cell phone, it could be a line of credit, it could be a credit card, it could be a car loan. Anything that shows up on your credit is considered to be a trade line. So you would need to have minimum 2 trade lines for a minimum of 2 years, right? So sometimes we see a lot of clients who are new to Canada and they have been here 6 months and their Beacon score is 800, which is considered to be a really good score. The banks don't consider that to be a good score, right? So technically what happens is in the beginning, you'll have a higher score because you just have low debt, right? You might have 1 credit card and you've been paying it on time. It looks all good to the bank and to the credit bureau company, so they give you a really high score. But let's say then you start adding more debt and then it starts to reduce, right? So that's the reason why they like to take an average over a time period of 2 years, right? A minimum 2 trade lines. So what happens is that you start off really high and then you'll kind of average your way out to technically where you need to be at, right? And usually the life cycle I've seen of a credit bureau is cool. It starts off really high, then kind of dips a little bit low, kind of averages it out, then it goes high up again. And the highest credit scores I've seen for people are usually retired people, right? It's because what they've done is now they've had lots of trade lines, they paid it really, really well, and most of their debt's all paid off, and now they're not really borrowing anything, and then their score's high again, right? So that's the life cycle that I see of a credit score. Starts off high, then it kind of cool dips down a little bit, and it kind of averages out a little bit more, and then goes up high again. And that's like the ideal credit score.